German retailers report a run on gold and silver. Looks like a nationwide lockdown goes into effect to curb high COVID infection numbers, and German precious metals trade is also affected, and there are reports of a rapid increase in demand. Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. Dave Kranzler, gold and silver expert. Unlike Ben Bernanke, one of the people who did see subprime not only while it was imploding, but well in advance. I'm going to embarrass you a little bit on the show today. I'm sorry, but I'm going to have to do it because let's pull up the silver chart here. So you can see we're recording Wednesday afternoon. Silver up 86 cents. And if I go back to my email, I have a message from Kranzler the Great. When did you send me this thing here, Dave Kranzler? Silver chart is the subject. And this is Monday, December 14th, 6:41 p.m. Central Time, so about 8 o'clock Eastern Time on Monday. You see is the blue line. And what does Dave say? I may be proved wrong, but silver appears to be coiling for a big move, and I can't imagine it break lower. Look at that. You're like that, you know, like you're like the old baseball pitcher where maybe he doesn't have the fastball. He's like a little long in the tooth. But the grizzled veteran still snaps his curveball for the young market bucks, and it was maybe the market reacted to your call. But Dave, you said silver was going higher. You're darn right this time. What are you seeing there?
What am I seeing?
Yeah, how did you know? I mean, come on, tell us mortals.
You know what? I mean, first of all, silver is just fundamentally tremendously undervalued. And
sound like someone got you a copy of the big silver short for the holiday season. Is that it? Great presents.
It's undervalued to begin with, and I'm not really a technical guy. I'm not really a technician. You know, I look at charts before I enter and exit trades, things like that. And I was just looking at the chart of silver, and it was, as you would say, coiling around its 50-day moving average, and it looked like it had been outperforming gold for at least a few days at that point. And I just figured it looked like it was going to break up or down, and I didn't see any reason for it to break down. So it made sense to me that it was going to move higher off of its 50-day moving average.
All righty. Well, gold and silver analyst Dave.
So, I mean, that's what I saw. I saw the chart. I thought the chart looked really bullish, and in combination with bullish technicals, obviously the fundamentals are absurdly bullish.
Yeah, and now here's another thing that maybe you saw, but maybe a lot of people have not seen. Our man Chris Powell on fire lately. We have some good headlines coming from GATA. Here, German retailers report a run on gold and silver. Looks like a nationwide lockdown goes into effect to curb high COVID infection numbers. And German precious metals trade is also affected, and there are reports of a rapid increase in demand, gold and silver. Dave, what do you think?
I saw the article earlier. I mean, the first thing I thought about is the fact that it's, and this has been the case for as long as I've been involved in the sector. The German public understands the value of precious metals infinitely better than the U.S. public. So I'm not surprised to see that. I think it's funny the way the media wants to tie everything that's going on to COVID, and that's not I mean, yeah, that might have stimulated, uh, a surge in interest in the precious metals over there. But I mean, if you notice what's going on in the EU, it's starting to unravel. And I think the German public's probably more reacting to, the potential problems that the unraveling of the EU could cause for the euro. So it would make sense that you want to sell your fiat currency and convert it into gold and silver. And apparently that's what they're doing.
Wait, I thought you were converting your dollars into gold and silver so then you could load up on euros. Because that's a solid currency, right?
Me?
Yeah, and Japanese
No,
yen.
I'm converting my dollars into gold and silver so I can load up on gold and silver. I don't want to own any fiat currencies.
Well, I got another one for you here, Dave. I guess, does that mean you're being deterred away from, sorry, I can't say it with this title with a straight face. This one is, you'd think I doctored this Reuters article, but apparently, Dave, did you catch the U.S. Treasury has labeled Switzerland as a currency manipulator while they move Janet Yellen into the White House and ask for a new stimulus package and don't even call it quantitative.
The funny thing about that, I did see the headline earlier. I'm glad you find it amusing.
Dave, I'm sorry to interrupt, but breaking scoop. I should have been more prepared. Vietnam, currency manipulator 2, which is really of the things going on in the world. We can't even figure out who's the president, but financial community now, it's clear Vietnam is a currency manipulator thanks to the U.S. Treasury. Steve Mnuchin really stepping up the game on the way out there, huh?
I mean, I saw the headline. The U.S. labeling any country as a currency manipulator is meaningless to me. I mean, the U.S. is the biggest currency manipulator. What a lot of people don't realize is that the Exchange Stabilization Fund, which Ronald Reagan signed the executive order authorizing it to buy stocks in 1988, 89, whatever. I think it was 88 when it formed the working group on financial markets. And they would use the Exchange Stabilization Fund. Well, the Exchange Stabilization Fund was started, I believe, in 1934. It might be 1936, somewhere there in the mid 30s. And it was specifically started to create a stable and liquid market for foreign exchange trading. And that also included gold in that basket. So, anyone who's skeptical of the idea that gold is manipulated by the Federal Reserve or the U.S. government or central banks generally doesn't really know their facts about history. So, the U.S. is the biggest currency manipulator out there. I mean, what's the difference between fixing and holding our interest rates artificially low and buying treasuries? That's in a roundabout way. That's the same thing as currency manipulation.
Yeah, Dave, I guess I was a little confused because what would you call confiscating everybody's gold, or at least some people's gold, at $21 an ounce? And then a couple of years later, well, by the way, now it's $35 an ounce. But is that currency manipulation? I mean, I don't know. In fact, if you needed like one specific incident,
that's dictatorial decree.
I mean, it's like if you wanted like a textbook example, they could put that in the encyclopedia. Although I'm curious, what do you think this one means? There would be no automatic punishment with a label, though U.S. law requires Washington to demand negotiations with designated countries. What the heck does that mean?
I don't know. You know what? I mean,
Buy our dollars.
honestly, I don't think worrying about that particular situation is really worth the brain power that it takes to wrap your head around it. I do
Dave,
think it's interesting that Vietnam was pegged as a currency manipulator because they pegged their currency to the dollar, and as it turns out, Vietnam is one of the larger importers of gold in the world.
well, there
At
you
one
go.
time, they were the fifth
That's your
largest.
answer.
At one time, they were the fifth largest importer of gold. Obviously, in Switzerland, there's a lot of physical gold that's actually stored there. Vietnam, at one time, was the fifth largest importer of gold. I don't know that they are anymore, but they see what's going on with the dollar and with the Vietnamese fiat currency, and they'd rather own gold. I don't blame them. They're, same thing with the Germans.
Yeah, and if we go a little further down here, the Swiss Central Bank is firmly under the Treasury's focus. Sounds ridiculous. After spending 90 billion Swiss francs on foreign currency intervention, didn't the Fed do like a couple trillion earlier this year? So,
Yeah, I think what the Swiss are doing is they're trying to push their currency lower, and I think every country wants lower currency right now because it stimulates exports. And that's because every country right now, the economies aren't doing so well. I don't care what the mainstream propaganda says. The U.S. economy is not doing well, and it's, as I'll be discussing in my short sellers journal this Sunday, it's rolling over again pretty quickly.
well, I like it. A nice little teaser right there, Dave. Now, I told you though that Gata, our good friend Chris Powell, out there was on his game. I mean, he's bringing all these headlines. Here we have Ronan Manley. Even its own auditor wonders if GLD really has the metal. Did you catch this one yet, Mr. Kranzler?
I have it. It's in my inbox, and I just been lazy and I haven't read it yet. But I'm anxiously. I'll probably read it sometime in the next day or two.
Well,
Ronan does fantastic work, fantastic research, tireless.
yeah, so a couple things he mentions here. Covering the financial year to September 30th of 2020, GLD 10K should be raising alarm bells given that the CFO who signed off on it, Brandon Woods, had only been in the CFO position at GLD sponsor for 1 day prior to the financial year end. He was appointed on the 29th. And then put another way, Laura Melman, the former CFO, resigned from the role on the 29th, 1 day prior. I think there's a rumor that they're actually going to wear Fox masks and then have all of the GLD investors wear hen and chicken suits. Just relationship is more clear because they did mention transparency, but Dave, there's a few more gems in here, but why don't we start with those?
I mean, Ronan actually did an article talking about the revolving door in the CFO position at GLD. That in and of itself should raise a red flag, right? It's like the revolving door for upper management at Tesla.
As they say in
we know Tesla's a large fraud. Well, I wrote a research piece back in, it was 2009, and I've been meaning to one of these days put it back up on my blog. The problem is I got to revise it, and that takes a lot of time because then I got to go through the GLD prospectus and look at some of the changes that have made it even more loosey-goosey. But whether or not GLD really holds gold or all the gold that it should be holding has been questioned since day one when the S1 was filed, and James Turk did a fantastic dissection of it and explained areas where there's loopholes that would enable them to get away with not holding the gold that they're supposed to hold and get around audits and things like that.
Yep. And well, Dave, we can scroll down a little more here. Let me get that pulled back up because as Ronan continues on, perhaps in the world of fly-by-night companies, CFOs depart and appear a day before financial year end. But this is not the norm when applied to the world's largest gold-backed ETF, a trust which, as a reminder, on September 30th, claimed to hold 40.8 million ounces of gold worth $77 billion. I don't know. I just find that any context of when anyone's personal money is involved, I don't know, this stuff is important. Yet here it's gold and it's like everyone's okay with it. What do you think about what he writes here?
I mean, he's just, unearthing further support for the view that GLD does not hold all of the gold that it's supposed to hold. It probably holds I'm guessing less than 50%, but I'm just throwing the number out there. Who knows what the real number is? There's not an outside bona fide independent audit that gets done.
Although
There's
Dave,
conflicts of interest all over the place with GLD. One of the things that I found really amusing was, remember how we went through that period starting like in March where there was a shortage of deliverable gold, the COMEX and the LBMA had to start creating more fractional bullion products to satiate the paper buyers. I found it interesting, if not hilarious, and really kind of pathetic that here's all this money flowing into GLD, and GLD like somehow has gotten its hands on all this gold, and people talk about it like the gold is really going into the GLD vault, and we know it's not. I mean, honestly, GLD was, and this wasn't my original thought. It was the thinking at the time when it was rolled out in 2004. It was rolled out to be a massive vehicle to capture institutional cash because they knew that there was going to be a trend of large inflows into gold, and it was basically designed to trap institutional cash and divert it into GLD and keep it from actually going and buying physical gold bars and safekeeping it.
well, that makes sense. Although, Dave, one thing maybe you didn't factor in here perhaps changes things because, as you see, one of the safety checks in place is that there's a custodian. In this case,
Right,
HSBC.
HSBC.
And yeah, I mean,
Yeah, it's been this
it should
custodian from
feel.
day one. The one that gets convicted, every other year for some type of felonious crimes, whether it's money laundering, for arms dealers or drug dealers.
Actually, Dave, let me, if I may quote here for a moment, HSBC can count itself fortunate for not being more heavily punished over their failure to prevent Mexican and Colombian drug cartels from laundering hundreds of millions of dollars. In addition to facilitating money laundered by drug cartels, evidence was found of HSBC moving money for Saudi banks tied to terrorist groups.
This isn't conspiracy theory. This is right here. This is from court documents.
Although, Dave,
an actual conviction or settlement or whatever they did. I think it was a settlement.
Well, no, not exactly, because even though federal investigators found evidence that senior bank officials were complicit in the illegal activity, President Obama's former Attorney General Eric Holder overruled their prosecutor's recommendation to pursue criminal charges against HSBC.
Of course he did. Eric Holder is a big hand puppet for the big banks.
Well, at least based on that, you could make a case for that. But Dave, let's get back here and cover the crux of what Ronan gets to down at the bottom, because you have the auditor, which I believe was KPMG. And basically, they added, maybe this we can run by Rob Keentz, who is a former auditor, a critical audit matter. And I mean, it's not really specific what it is, but it was something that was added talking about to assess the quantity of gold held by custodians. So basically,
Oh,
even their
whoa,
auditors.
scroll back up. Evaluation of the evidence pertaining to the existence of the gold holdings. What else do you need to know?
Well,
Go ahead, carry on.
I mean, maybe that says enough. And again, I'll let folks read the article, which you can find. Actually, here are some of Ronan's conclusions. Why did the sponsor resign one day before the financial year ended? Why did the new one arrive? Why does the latest GLD 10K withhold quantity data on how much gold was held at the Bank of England between April 15th, and August 13th? Why has GLD auditor KPMG suddenly added a critical audit matter to its audit statement about evaluating the evidence pertaining to the existence of gold when KPMG has been the trust auditor since 2010 and has never done
I think
so?
part of the answer to that is, so when you go through the sub-custodian, and the reason why they can borrow gold bars from the Bank of England is so HSBC is the custodian, but they're allowed to use sub-custodians, right? So as hard as it is for anyone to just knock on the door of HSBC's vault and get let in, even the damn trustee of GLD has to give them something like maybe 24 hours notice before. They just can't stop by and knock on the door. Hey, we just wanted to come and look at the bars, on our lunch hour. They can't do that. It's a formal process they have to go through, and there's a time delay between when they put in the request and when they're actually allowed to walk through the vault door. Well, guess what? The sub-custodians, no one's allowed to go visit the sub-custodians to inspect the gold. And I'm guessing that's why, and it's always been like that, but it's interesting that KPMG just now put that in there. I think that's part of what it's alluding to, is the fact that HSBC, and it was designed so that the HSBC could play hide the salami with the gold bars by using sub-custodians. And that's what it is. That's the bottom line. It's one big goddamn shell game.
New all-time quote of the Arcadia Economics Show: "Hide the salami with the gold bar." But Dave, come on, man, ease up on HSBC. I mean, next you're gonna be like accusing them of being communists or something. Although, wait, actually, I told you Chris Powell brought it this week. Senior staff at HSBC, Standard Chartered, and Deutsche Bank are Chinese Communist Party members, according to documents seen by the Daily Telegraph. So
that's fantastic.
Although, I mean, I think clearly what we're seeing here is that, even if things don't go well in a certain part in your career, you can always be well qualified for a career at the Treasury. Seems like HSBC, if you got that on your resume, you'd probably be a perfect fit here, where we just run a shell game with the national debt. Dave, I don't know if you saw this. Oh, wow, your buddy Yara is going to be happy. She likes her even numbers. I did an episode on Monday of how the dollar to gold ratio, I thought of the title, and it was 33,889. Got up to 890 by the time I recorded. Now it's up to 33,914. And look at this symmetry. I mean, these numbers grow by the day for the dollar to silver.
Except it's higher than that because you're using M2. And you want to know why you're using M2? Because in 2006,
M3 broke their calculators.
The Fed decided to stop reporting M3, the only major industrialized country in the world that doesn't report it, the M3 measure of the money supply. So the true dollar to gold ratio is even higher.
Dave, you know what that's called?
What's that called?
Deficit reduction. That's those are the plans to save the deficit. The $1 trillion platinum coin, Obama wanting to rig CPI formula, or just save a couple bucks on M3. So anyway, one last one. I may have showed this to you recently. I just keep pulling it up though. Here is a home price index chart. You see 465. So basically, back in 1990, about 166, even 188 and 95. So I mean, it's kind of tripled since then. I don't know if my discounting math is off, but doesn't seem like 1 or 2% to me. And perhaps all these things are connected. You see here, well in excess of the housing bubble, but maybe that's why gold is at $1,860. Why people are the demand for us has tripled to quadruple in Germany, and well, maybe that doesn't explain HSBC being communist in addition to everything else, but perhaps they're all connected, which, folks, just in time for Christmas, you can learn more about by going here, where you can read or listen to chapter 1 of the Big Silver Short featuring Dave Kranzler over there. Dave, I know you've had the book for a while. Would you, I'll have to get that page fixed, but good Christmas present, that Big Silver Short? Yeah. Have you read your copy yet, Dave?
Of course.
What'd you think?
It's fantastic.
You're not just saying that because you're chapter 1, are you?
Well, there may be a little bit of bias there, but honestly, it should be put up for a Pulitzer.
Oh, thanks, buddy. It's definitely all about chapter 1. But Dave, I appreciate you being a part of that, and appreciate you being a part of the show this year. I know we're getting close to the end, 2020. Anything that you are looking to or that people should watch out for in the last 2 weeks of the year? I've stumped him.
You know what? It's just going to be more of the same. More of the same grind. They're going to keep shoving this COVID stuff in our face. They're going to continue to manipulate the price of gold and silver. They're going to continue trying to inflate the stock market higher. You know what?
We got to make you the Santa Claus at the mall.
Just go out and enjoy themselves as much as they can while they can.
We got to get you set up as Santa at the mall, so like little kids can come. You can deliver that uplifting message, like, kids, it's not going to get better.
Yeah,
it's going to be a grind. There's no Christmas this year.
Take down my mask. Listen, kid, you're fucked.
Be like, got any silver in your pockets? So anyway, Dave, maybe we will keep you out of the malls and away from little children would probably be good. Although for all of the adults out there, for Christmas, really even better than gold and silver is having the ability to use your own knowledge and insight to essentially turn the alchemy of the investment research dynamics mining stock journal into real life gold and silver. Dave, can you let folks know what they're going to get there?
Every other week, released Thursday afternoon, I put in my 2 cents about, with market commentary about the precious metals market. And I review and update the companies that I cover and recommend and invest in, if there's been material news to update them with. And then I'm constantly on the search for new ideas. And I've got a bunch of new ideas on my plate now that I'm looking at. So I think most of the ideas that I put in there and recommend have done pretty well. There's been some dogs in there, but, that's just reality.
Well, I will be looking forward to next week's edition of the Mining Stock Journal. Dave, I noticed you said your 2 cents. Have you ever heard how Peter Spina of Gold Seek and Silver Seek, he says, well, I'm just going to throw in my 2 ounces on this one. So the fun things that us gold and silver dorks like to do to amuse ourselves. Although with that said, Dave Kranzler, thank you again for joining me this week. It's a pleasure as always.
Likewise, Chris.
And for folks at home, I know if you're thinking, geez, Dave's episode is over. Fortunately, I was lucky enough to be part of a roundtable on silver last night, including Bill Holter, Andy Schechtman, Lobo Tigre, and many more, which is coming your way now.